Hello and welcome back to another episode of the Investor Financing Podcast. Today's show, we're going to talk about multifamily investing and how our guest was able to really grow his business quickly, although nothing's quick because it all started back in 2007 when he started buying small multifamily properties. He got up to about 30 properties, and then during COVID, really, he kind of just said, wait, there's got to be a better way. He during that time, I'm sure as prior to COVID, he was basically selling some of those properties he had owned for a long time, which had built up equity, and he kind of stumbled into a couple different multifamily mastermind groups, and I think you're in Brad Summerick's mastermind group, is that right? And so you learned the multifamily game pretty quickly, and you quickly realized after the training that you should probably invest as a limited partner in the beginning so you could really get a good understanding. And then, we've talked about this on the show before, invest as a limited partner with good operators and sponsors. And then once you get your grasp, then you start acting as a GP, and that could be with other GPs. And that's how you kind of progress. But our guest today is a anesthesiologist by trade. He came to the country, our country in 1994 from Romania. Started from very humble beginnings and really just, worked hard and realized that real estate was a good way to get rich over a long period of time or wealthy. And he just acted on that. And that's the power of real estate. You can start with these smaller properties. You can eventually take the equity from these properties and parlay them into large multifamily properties, either as a LP or as a GP. And it's really about stepping stones. So anybody out there that's just now buying their first duplex or triplex, just think about 10 years down the road. If you keep on stacking and buying properties, you can go from owning no large multifamilies to about 4,000 units as a GP and an LP. So that's pretty impressive. But you got to remember, he started this back in 2007. It wasn't overnight but really he went from 30 units to 4,000 units in 2 years. And so he did that by parlaying, by finding good operators and sponsors in the multifamily game, by getting a mentor, and then he dove in as now a GP. Please welcome to the show Tudor Francu. MD, welcome. Thank you so much for being here.
Thank you, Beau. I appreciate you having me on the show.
Yeah, and so that's why I always frame, I get the backstory so I don't have to ask you the same questions over and over again. Like other podcasts, they always want to know your history. So I try to take the notes and do it in over 2 minutes so we can dive into the meat and potatoes. So you built up a substantial amount of equity in these properties over years. You had some capital. Obviously, you're paid pretty well, possibly as a doctor. You get paid decent. Obviously, you're paying a high tax bracket, and single families don't have as much tax benefits as these larger multifamily because you start doing big cost segregation reports and all that stuff. But during COVID or prior to COVID, you said, wait, let me see how I can make more impact in the investing game. Multifamily is a good avenue to go. You then kind of looked around at mentors and you found Brad's group. You joined Brad's group. And then had you made any investments as a limited partner before joining the group, or was that when you started investing as an LP?
No, I started making LP investments when I joined a group and I started knowing some people. But it all started basically with the concept that you accumulate a certain number of single family homes and everything is going well and it's a good cash flow, but it's a lot of work. And it's like having, 30 kids around you that you have to attend for each one of them. And they produce a good amount of money. But as I said, at some point, the efficiency of the model starts to lack because we don't have that much time to take care of 30 single family homes in our lives, right? So at some point I was like, it has to be a better way. I didn't know much about multifamily. When I joined the mentorship group, I was looking for a solution to my problem. I didn't know what kind of solution would be. And by start networking with people and asking questions and see what other people doing, um, I realized that there is a way to scale up this model with the same amount of work, right? Because you work on a single family home purchase and closing and due diligence and all this stuff, where you can join a team that buys a much bigger complex of apartments. The amount of time is more or less the same. The process is more or less the same, but it's a scale up model. And you leverage all kinds of resources of the people that you're joining with. And then, everything becomes more efficient. So at that point, I was like, okay, well, it sounds great. Let's see how we can start doing this. And the GP model was the general partner model was very interesting to me, but I was not there mentally. And also, I didn't have enough education to know how to do those things. And again, it's COVID time. Everybody stays home. Everybody starts, mind starts flowing around with different ideas and what can we do. And some people got into different other hobbies. And I was thinking, well, this is a great opportunity for someone who wants to scale up the business, because there's so many other ideas that you can find in a time like this that can help you grow your business.
Awesome.
And I that's how it started. And you go and talk to people, and the first thing I did, I was like, let me just go into one of the deals with someone and see how they work and see how they process the communication, what they do, what are the steps needed to be done. So I start as an LP in a deal. I ask a bunch of questions like a novice, and you start really fast learning process by doing that. Because what I was very surprised in this field is that people want to share. People want to share information, how they do things. There's a competition at the level of the deals that you bid and you offer, but the rest of the time, people help each other. Those groups help each other, and if you get into one of those groups, you learn a lot very fast. And that's how I started.
And the nice thing is when you're putting money in their deals, they're even more eager to help you, right? Because
Exactly.
they look at you like, okay, he's a doctor, he's got some money, and so really it's like going to Harvard Business School. You got to paying your 100 grand, your 200 grand, your 50 grand, whatever the minimums or whatever you feel comfortable with on an investment. But basically, you're getting involved. You're reading the PPMs, the private placement memorandums. You're asking specific questions about the deal. You're looking at like what the debt they're getting and how they're financing it. So you're basically getting the education. On top of that, that 100 grand hopefully becomes 200 grand by the end of it, and over the next couple of years, or maybe better. So let me ask you: you've invested with several different sponsors or general partners. What was one experience that was really bad and you said, and we're not going to name names, but like you're like, I wouldn't invest again with this person? And then what was another really amazing experience where you learned a lot from a different sponsor?
Yes. So let me start with not so pleasant one, so to speak. I didn't have any bad experiences, honestly, but I think it's a matter of expectation. Where people put their expectation and how disappointed they are or not out of that. So I think it's a matter of how you look at things. The deals are good. The deals are good. It's not a matter of the deal didn't work. It's just that the expectation was to have some returns faster than I thought. Um, and it didn't pay out. I mean, I have a deal, for example, right now that after a year and a half, We didn't get any distributions because the market was the way it was, and that location and that group was a little slower of implementing the business plan and getting some profits out of it. But I'm sure it's going to work out. It's just like I said, it's a slower start than I expected. The best, another great deal that I was in was that I didn't expect to get cash flow right off the bat in like the first 2 months. Just because, again, the group that was handling this deal was very prompt in implementing the business plan. They got right on after closing. They bump up the occupancy rate, increase the rents, remodel some units right away. And so the money starts flowing in right away, which is great. I don't know if it's going to keep it like that, but at least, they started off really well.
So we're in a crazy time right now. There's a lot of fear in the streets. We have huge inflation. You talk to a lot of sponsors, a lot of operators. What are your thoughts after speaking to all these people? Are you still pretty bullish, or are you kind of like, the reason I'm saying this is a lot of people, I mean, we went through, like, the last 2 years has probably been the biggest bump in multifamily I've ever seen in a short amount of time. But what are your expectations going forward? Do you have any concerns, and how are you going to adjust your business model right now?
It's a very, very good question. And I think I would answer it in two parts. First of all, I think one of the regrets I have is that I haven't started doing this years ago. So I lost a little bit of time. They say, don't wait and buy real estate. Just buy real estate and wait, right? Because this is one of the best asset classes you can put the money on, because it's real. That's why it's real, because it's real, right? I mean, they can go anywhere. It's not cryptocurrency. It's not stock market paper trails, and it's very real. Their properties, their buildings, their land. So I would say, for someone who is concerned about the present market situation, there have been several times in the past that we've dealt with this kind of issues. It's nothing new. It's not going to be the last one. So it's a matter of how you balance things with your investments. I would say, for me, I would continue to invest in real estate. I will continue to look for solutions to make it more profitable. But I think overall, over time, it's going to pay off really well, in time.
Yeah. Yeah, I agree. You got to be able to weather any storms that come, right? And that's having your reserves. But if you're buying cash flow assets, or cash flowing assets from day one that are at least break even or better, even on value add, your downside risk is limited versus doing a heavy value add. Those would be more of a risky investment in a market that's changing.
Yeah, absolutely.
And I guess following up with that question is, you started, had some odd jobs when you moved to this country, in 1994, worked your way up, put yourself through college, got your doctorate, became a successful anesthesiologist. During that time, you realized that, hey, I have to start buying real estate to create wealth. Then you transition to being a limited partner, and now a general partner. And so as a general partner, I would think that your coworkers, other successful doctors and so forth, are seeing what you're doing, have you probably quadrupled your net worth, if not greater, from real estate investing. And they might just be working in their job, making, couple hundred grand a year, doing very well. But really, a lot of these people end up paying so much in taxes because they have no write-offs. So are these people that are around you in the medical field, are you starting to kind of educate them and get them to invest with you alongside with you?
Yeah, absolutely. I was very surprised that once I started investing in single family homes, and everybody around me kind of knew what I was doing on the side, but they didn't realize the scale I was doing the things. But once I start talking about the deals that I'm in and what kind of opportunities in terms of investments for their money they have, they became very interested because it's a way where people get together from different parts of the professional businesses, right? And they put money together, and you create a syndication and you buy a building like that, and they everybody feels more comfortable. So it's a group model that dissipates the risk. It's not only one or two people who are like heading this venture, right, to see where it goes. It's a very strictly organized group that follows a business plan and answers all the questions to their limited partners. So all this, the doctors that I had around me and my friends and everyone that was interested in what I'm doing start asking me questions about those investments. And I start little by little realizing that not only that I have to explain what I'm doing, but I have to start educating people that are potentially interested in coming in the investments with me. Because I realized that they don't know. You don't know what you don't know. So you have to expose people to some other aspect of your life and different explanation of things in business to realize, oh, there is a better way to invest my money there. So a lot of people were very grateful. I started a little company in the beginning that grew with time, and well, it's been almost 3 years now. I have my own website. I start getting newsletters out. I start educating little by little about how the multifamily works and how you can participate as a limited partner. And also, if you're interested to be a general partner, what does it take? Because it's not for everybody. Some people just don't want to do that work. I mean, it's a lot of work to be a general partner. You get compensated for that, but some people don't want to do that. So they just want to be a limited partner. And to be a limited partner, you have to be educated. You have to know how to screen through the deals. You have to know how to screen through the sponsors. You have to know how to look at communications between the teams and the limited partner groups. What is the better way to sift through all this information and find out exactly what you're looking for as a limited partner? Some people are interested in more cash flow. Others are looking for 3 or 5 year total returns. They don't care about cash flow that much. And some people are in only for the tax advantages. They want depreciation. They want to take advantage of their tax savings. So there are multiple things that people look at, and if you start educating them in all these aspects, everybody picks one thing or another. Of course, in my profession, it's a different set of people that they have, high income, high net worth, educated, and most of the time cannot take advantage of the tax savings that multifamily offers. Mm-hmm. So you need to find a way to start giving them options of how can they take advantage of that depreciation and cost segregation of your property. Because there are ways. It has to be, like Tom Woolwright says, you want to change your tax, you need to change your facts. So it's just a matter of mindset. How do you look at issues and problems and find solutions? That's all it is.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. At what point will you, or do you just like what you do as a profession, or have you thought about stepping down? Sounds like now, close to 4,000 units, that you have probably enough distributions to easily cover your salary. But some people really like being their profession and don't plan on retiring from there. What's your kind of 5-year vision of what you're going to be doing?
Yes, it's an interesting question, and I thought a lot about this. But the fact that you dedicate your life to do something in the medical field, this is not a hobby. For me, medicine is not a hobby. It was my life. It is my life. I'm probably going to start, doing this for the rest of my life. Not at this pace, maybe. I'll slow down at some point and do maybe just 1 or 2 days a week. As of right now, I'm on that path. I don't know how long it's going to take. I'm not worried about it. I just need to make sure that I expand this kind of multifamily endeavor that I'm in to bring in more people that I can educate and teach them how to do things this way, because there is another way, rather than practice medicine until you retire and you're tired and you don't have time for anything else. So I want to give that people an option, those people an option, and see if they want to choose it or not. But that's all is it about. In 5 years, who knows? I don't want to predict anything, but I'll probably focus more on multifamily.
So I know, looking back from where you started to now, probably you've accomplished a lot. And I'm sure you're even more excited about the future of what you're doing. And now you're getting more of a passion out of helping other people, right? The more people you help, the more money you end up making. And that's true in the whole syndication world, right? You're educating people that some of these doctors making $1 million a year, but don't really have that great of net worth. I never can figure that out, right? As I'm a mortgage guy, right? So I started as a residential mortgage broker. I do commercial lending now. And I used to get these applications, and I'd see these guys, 20 years ago that were making a couple $100,000 a year, and they had no savings, no assets, and they're high-paid professionals. And I think these people, it's just, where's the money going to? You might as well invest it, make your money. I look at every syndication you're doing is really like an employee, right? Like they're going out, they're bringing back money, and then at the end they're paying themselves 2 or 3 times, and that's the goal of investing in syndication. So what are you doing? What do you do on a daily basis? I mean, it sounds like you're pretty consumed with being a doctor, and also a full-time investor. I mean, let's face it, you're you have 2 jobs. You love them both, which is great. And on your spare time, what are your hobbies? Are you one of those guys that's really into personal development? Is that what really kind of gets you energized? Or do you go out on kayaks? What do you do when you're not working?
It's funny you ask. I do a lot of things. Yes, I'm into personal development. I read a lot of books in this field. For me, it's a source of growth. I think everybody should start thinking about how you can grow over time, because otherwise it's not gonna you're not going to develop any other skills or assets in your life. Um, and I also do a bunch of other things. I like being in nature. I like traveling. I do ballroom dancing. I have a little bee farm on the side that I take care of. You know, I dive whenever I can. I love diving. So, you know, there are different things that anyone can do, and I enjoy doing a bunch of other things.
Very cool. Now, you raise bees?
Yes.
Okay. No. I'm really into raw, unfiltered honey because
Yes.
I just figured I like sugar, in my coffee, etc. So I started using kind of like monk fruit. Obviously, it seems to be a healthier choice than our processed sugar if you look at it from a scientific way. But then I really said, you know what? The most natural sweetener in the world is raw, unfiltered honey, right? It's such a powerful source of nutrients that people, I think, is overlooked often.
Yes. It's a hobby that started with my grandfather when I was a kid. He used to have a little apiary back in Romania, and I remember being with him in the summer and taking care of those hives. And now I have the privilege that again, the power of mentorship. You learn from people that are doing this every day. They teach you how to do it. It's the same thing in multifamily. It's the same thing in beekeeping. It's the same thing in medicine. You start apprentice with someone who can teach you all the skills, and you become more confident in what you're doing. But it's a very fun world to be in. I have to tell you that.
Do you actually like sell your honey?
Yes.
Oh, nice.
Yeah. Yeah.
Yeah, I actually like, I stopped using honey for years, and it's only been like the last 6 months since I was like, hey, this is a healthier, much healthier form of sweetener. And I've seen it, but that's a fascinating. Like, I never met somebody that raises bees essentially, and so they're a fascinating insect, right? Like they go and
Yeah. They can teach you a lot of things if you start observing them and their social structure and the way they behave in the hive. It's very organized. So you learn a lot from them, honestly, the way you do things. And that's how, sometimes you apply those things in your life. And I'm a fan of organizing your life and planning and do things more structured and have a routine every day of how you do things. It improves your efficiency a lot.
Yeah, and what is a book, either multifamily or real estate or personal development in the last year or two that's made a big impact that you really enjoy that you'd like to share with the audience? Or it could be an
um,
old book, could be an old book, could be any book.
yes. I think you know my Bible, and I remember this years and years ago. My Bible in real estate was Robert Kiyosaki, Rich Dad Poor Dad, where it's not really a real estate book. It's more of a personal development book, but it opens up a bunch of possibilities and thoughts in your mind. And that's how it started for me. Another excellent book is the one that I don't know, many people are the Untethered Soul. It's a great introspective, meditative, calm book that can recenter yourself. So look for it. I really enjoy that one. As far as real estate books, I think there's a bunch of them out there. You can learn anything from anybody. That's my opinion. I read whatever I can. There are different points of view. It doesn't necessarily mean that they're good for you, but you learn, how other people do things and what their mistakes are, and you apply whatever you want for your situation. So I think reading in general, it's one of my passions. So I wouldn't refuse any real estate book, honestly.
Let's face it. There's common traits you'll find with successful people. They read a lot. They have mentors. I mean, those are like the two biggest impact. I mean, everybody, if you're not reading or listening to books and you don't have mentors, you're probably not growing at the rate you should be.
Yes.
If you really want to grow, and it's not really about I mean, sure, we all want to be ultra rich and that kind of thing, but it's not even about the dollars. It's just about the quality of life. I think that's what, if you learn from successful people in different facets, and it doesn't necessarily have to be, because you get to a certain point in your life. I interview a lot of people that are very wealthy, and you get to a certain point, and like the money isn't really that important anymore because you have more than enough that you'll ever need. It's really about the legacy and the journey of life, and like how many other people. I think once you get to a certain point, it's like how many people can I bring up and help them get financially free? Because once you're financially free, you have more time, and time's the most precious commodity, which lets you, go ballroom dancing, go scuba diving, raise your bees, do your passions. And so, yeah, well, where's the best place where people can follow you?
I think I'm on social media, pretty easy to find, on Facebook and Instagram. I also have a website for multifamily. It's called stellarmultifamily.com. You can contact me there, or on social media. It's easy to find, LinkedIn, whatever.
Awesome. All right, everybody. I hope you enjoyed this show. It was a great story of how somebody, came to the country with not too much money and really carved his way, and just, realized that real estate was going to be a long-term play, and progressed, found mentors. And because of all the stuff we don't see underneath the water, he built some equity, and then was able to quickly get involved in lots and lots of units, diversified and grew his portfolio. And a lot of it's passive now, where it's coming in, and he's got team leaders and so forth. And we'll love to have you back on the show in a few years just to see how the growth's gone. By then, it's going to be 100,000 doors, and who knows, right? So thank you so much for your time.
That's a great idea, Beau. Now you gave me a push.
Yeah, 100,000. Yeah, we're going to get a website, $100,000, 100,000unitclub.com.
Awesome.
That would be kind of cool. But that's how it all works, though, right? You make progress, and then you can grow exponentially.
Yes.
And it's really like the first, like the snowball. You roll in the snow, you roll in the ball, it becomes bigger and bigger, and then you get momentum, and it just starts going, right? Because in the beginning, it's the toughest part, right? You're working hard, and like it's harder to save money because you're limited on the income you can make, and then you get higher paying jobs, and then you can take some of your money and then deploy that money, and it works for you. Because I think for a lot of people, it seems overwhelming to the people like, oh, well, he had a lot of money because he was able to like quickly invest in all these units. But really, if you listen to the story, it started in 1994, and it took 20 years to build that net worth, which that equity in those properties to really. Then he was able to grow quicker, but it wasn't like an overnight success. It was a lot of hard work. And I think a lot of people don't realize that it's always hard work, and you always got to put the time in. There's no overnight successes really in
there's no really any shortcut to this.
Yeah. Well, thank you so much. I hope you guys enjoyed this episode, and we'll see you on the next one.
Thank you, Beau.